Hello, everyone. Welcome to today's session. Let's get underway here. Let me just open up my drawing tool, and I think we are good to go. Let's jump right in with current market conditions, and we've had really a fantastic 3 or 4 days where we're seeing continued breadth coming back into the market. We're seeing really acceleration across the board, minus the major leaders that have been working, NVIDIA, Microsoft, Amazon. A lot of those have had some retracement in the last few days, and seeing some rotation into other sectors and into other stocks as well, other than just those big, massive leading stocks. They're still continuing to work, but we'll spend some time going over some of those as well. Current market conditions, we're sitting right at 26.76. It's really an impressive rally that we've had. That 26 number represents. Where did my guy go? There he is. Represents or is also showing on this number right here. So it shows up right here, 26.76, and also just showing where we're at in this trend. Are we at the beginning of the trend? Are we in the middle of the trend? Are we later in the trend? Well, 26.76 is as high as this has ever been. So we're definitely at the upper end of the trend. Whether we're going to continue within this overall uptrend, whether during the trend or have a retracement counter trend along the way here as well, similar to the ones that we've had in the past, something like this or something like this. Not necessarily talking about something like this yet, but these kind of moves start with this kind of a move. So we'll obviously at analyzing things as it comes to us each day, and that is as of right now, we're just not seeing anything other than the extension of the trend to give any clues of any kind of selling at this point. One of the things we want to watch for is we do want to watch for breadth, and we want to watch for momentum, and we want to watch for sentiment. Right now, what we're seeing on these three is we're just continuing to see this sentiment line, which is moving higher. Oftentimes, when we do see a spike or we do see a top, oftentimes there is a spike of momentum above the sentiment, or momentum gets and stays above momentum. That happened right here. We'll see if we get it to happen here as well. But we're also seeing some continuation with breadth, so working its way to the upper end of this range, and also stuck right here in the summer months as well. Volume is going to be a little bit lighter during these periods of time, and also seeing political rallies. We're in an election year. Stock market typically does quite well during an election year. The stock market tends to favor the Republican side of things. So with this, with this assassination attempt, which is really crazy, the market's actually moved a little bit higher after that in terms of Trump being okay from that situation. Pardon me. So we're seeing momentum to this upside, seeing breadth also move up into this upper range now, which hasn't been happening now for most of this rally. You can see that we've talked about this each time the market rallies. Early in that rally, we saw real strong participation, and then this next move higher, not quite as much. And then as it's been working higher, this uptrend, this last part of this uptrend is almost entirely NVIDIA and Microsoft and Google and Amazon, and those stocks that are in that space as well have been moving the market higher. They've been starting to retrace, and we saw a big spike right here in this last little move that we've been seeing in the market, pulling more stocks into this rally. This is going to be interesting to see if we see a continued broad-based rally, jump everything in. That typically is the way markets are going to top out, is at least a capitulation type of move when we have everything moving to that upside and large participation. Not that I want to dwell on a topping process, but we want to be aware of that. We don't want to necessarily be all in or be real aggressive unless we have really tight stops and our targets are a little bit shorter. That's one of the things I've adjusted slightly in our wheel portfolio, is we're taking profits a little bit sooner on a portion of the position. And as your trading plan evolves, then you can certainly make those considerations or include it into your trading plan. Chances are you haven't been through a circumstance just like right now. Neither have I. None of us have. This is every day is a brand new market condition in the stock market, because it just is. It resembles certain times of the past. Price patterns will continue to work. Price patterns are going to tell us when we have something that's gone too far too fast. But in terms of the market right now, we've never had this scenario before. We've never had AI. We've never had, just like we never had the internet, just like we never had automobiles, just like we never had, you go back to whatever the technology is that is brand new. That creates new and exciting times for investment opportunities in stocks. And that's part of the fun of investing in stocks, is there's always these new cool technologies that are emerging. Which ones are going to win out, which ones are going to be really profitable, which ones are going to be duds. We never quite know exactly, but it starts to present itself in these trends. So this quick look page is just that. It's kind of a quick glance page to say where we're at. Mostly in the real long-term perspective. Yep, we're in an uptrend. Yep, we're in the upper ends of that trend. What does that mean? Typically, it means what percentage should I be allocated towards stocks based on my ability to manage and handle volatility, okay, ups and downs. Could I afford to have my entire portfolio in stocks and potentially have a retracement of 10% or 15% or 20%? Which, again, chances are most of you have felt that either in a 401k plan or an IRA plan. Just the volatility that the market can create. Individual stock trading, you can get more or you can get less. It just depends on how big of a position size you're taking and where you're placing your stop loss. We'll go through a few more examples as well on that. Buy-sell ratio, let's skip over to this because we saw a really big spike in the buy-sell ratio. This is also corresponding to or a part of that entire breadth movement. Okay, this gives us that real solid perspective of stocks moving higher and participating in this overall uptrend. So now we definitely are on the upper end of that range, and we got there in a hurry. It happened in one day, spiked really sharply. We had talked about that. We talked about this last week where we had a bunch of stocks kind of just spring-loaded into this hold range. And so as they're doing that, they've got to move. Most of the time, they're going to move from a sell trend up to that hold trend. Okay, and the sell is simply just a downtrend. It's saying this particular stock is in a downtrend, or in the buy, this particular stock is in an uptrend. As it's entering into those trends or exiting those trends, then we can use those as actual signals to say, okay, I don't want to participate in this any longer. It's now moved over to the sell. Or now I've got sell stocks bumping up to this hold. Now I can look at those and say which ones maybe getting ready to pop to that upper range. Let's look actually at a couple of these Dow hold stocks, these 9 stocks right here, and see if we can get kind of an idea. So Microsoft. So again, some of these names, Microsoft having a pullback, NVIDIA having a pullback, Google, Amazon, a lot of these big name S&P stocks and NASDAQ 100 stocks are all getting some retracement right here. As of right now, this is a pretty healthy looking counter trend. Okay, but we also talk about this pattern. This pattern starts to show up as we're working our way higher in a trend. Okay, and we typically want to utilize the 6-month time frame and then focusing on green. And as we get retracement back to this 236 Fibonacci level, the 236 Fibonacci level is automatically going to snap to the high and the low of that time frame. If you aren't using it, I suggest using it, which is just simply clicking this button right here. The defaults, when you pull up the defaults, which is the box right next to it, it's typically going to look like this. It's not going to include the 236 in there, but it's highlighted. All you have to do is just check that box. And sometimes I think the default has this 886. So really, these are the settings I like to have. I like to have the 236, 382, 50618. Now, what this is creating is a framework. It's creating a structure that we can work on. So if all I did is just highlight and just visually focus on this part of the chart, that's really all we're dealing with most of the time. And even more importantly, we're typically only focused on this part of the trend, because once it starts to retrace and get pulled back to nearing this zone, it usually will go back to a yellow. Okay, not always, but once it does, then we start to get this. We'll typically have a short-term trend, which will have shifted back down again. So we start to get this perspective, and this perspective is starting to tell us I'm getting close to a decision. I'm either going to get stopped out soon or already, or I need to adjust my stop losses if I've been in this trend and I'm now watching for that stop loss location, or I can go ahead and sell. Okay, if I'm looking for opportunities to raise more capital, or I should say raise more cash in my portfolio, then these are some of those stocks where you can say, I haven't been stopped out yet. It's not moving. It's not in an uptrend any longer, or I should say it's not in the green uptrend any longer. And once that starts to happen, that means the trend is starting to come under question. And we don't necessarily have to sell, but we can if we haven't been stopped out. And that becomes just a decision. We can say, okay, I'm close enough to my stop. It's obviously not working. Or I don't want to wait for it to work now. Now I've got to, wait for the support. That could come up, it could come back down, it could continue. That could take weeks. Okay, so Microsoft at this point, if I were in Microsoft and I were to say I have a stop loss that's just below this 236, that's 449. It's probably going to get stopped out today. If it doesn't, maybe give it a day to watch to see if it holds that support. Okay, but this is that perspective when you're saying what, especially if you're in an uptrend, I've got to make a decision, or I'm getting ready to make a decision. I'm either going to get stopped out, I'm going to close the position if I want to raise cash and just sell the entire thing. Okay, remember that there's no such thing as a bad decision. There's just your decision. Okay, and so it is essentially, if I've decided I'm going to sell this stock based on these criteria, and I've already said I'm going to do that, then do it and be fine with it, and don't second guess it. Say, oh my gosh, it just rallied the next day, or oh, it's Microsoft. Microsoft surely is not going to go down, right? Don't second guess your decision. Just do it and then be done with it as a part of the trading plan, because there's going to be every single day you're going to have a reason that you could second guess yourself. Every single day there's going to be something that you do that ends up doing something different. Okay, so you said typically in that, you sell something and then it goes higher. That's frustrating. But the way that we can deal with that, let me come back to this, because I just wanted to, here we're focusing on these sell signals. Okay, so we had Microsoft, or not sell signals, but hold signals. Here's Merck as well. So Merck, you can see that's a pretty ugly chart pattern, at least on that 6-month time frame. Really volatile, lots of choppiness, lots of whipsaw. Remember, we talked about whipsaw last week. Whipsaw is when you have a trend that doesn't continue. So this is typically what we're looking for in a trending move, is that green the entire time. Eventually it's going to go back to yellow, probably red. And then once it moves higher again, we go back to green in anticipation of this, in anticipation of more upside. If that doesn't happen and retraces and it comes back and then we end up getting stopped out or we end up selling, that's referred to as whipsaw. And in momentum trading, that is the price that we pay for trying to get into one of these trends, is we're going to have some that don't. Okay? And that's okay, because typically those losses, those stop outs, are relatively small. We exit out. It's not moving the direction we anticipated. It's fine. No big deal. Let's get out of it and let's move on to something else. Okay? It's particularly once it starts to show some weakness inside of that downtrend. So if I were looking, in this case, if I were looking at Merck and saying, should I buy Merck? Well, it's an immediate no. You instantly know, no, I'm not going to buy it based on this momentum strategy. I probably wouldn't focus on Merck anyway, just because of this number right here. We want 80 or higher most of the time, because they're strong. They're proving that they're strong as well. Okay, so most muscle stocks, when we look at those, you go to new buys, you're going to see ranks that are 99, because their momentum, they've got the momentum right now. Everybody's interested for whatever reason. Typically it has to do with profits or products. Okay? New ideas, new products, new technology, and are they making money? Are they profitable? There's no other reason to own a stock in a momentum style where you're looking for the appreciation for it to go higher. Okay, I'm expecting the price to go higher. If I want momentum, I want a little bit higher rank, because those are the ones that can have some of the best probability of continuing that overall trend. Okay, here's another one, MSTR, MicroStrategy, having a big run here as well, high ranked stocks. So most of these, all muscle stocks are going to be these higher ranked. Typically they're above 98. Okay, so this is the place to start to look for. Now we can add into that and say, some of these are real small cap names. I don't want to trade those. Well, in that case, create a screen that pulls up stocks that are large cap stocks. Okay, so here I may have a large cap uptrend. Come on, here we go. Okay, and if that ever happens to you, if you're on this output screen, sometimes you click to this other one. The first time it doesn't stick, but the other times it will. So if you're not seeing it change, then just click back over to this one, and then you'll be able to get that to update. Don't know why it does that sometimes, but in this case, I could say, okay, what are my criteria? I've set one that I want a market cap of $1 billion, and I want volume of 250,000, and I want a PE of at least 1. Okay, so then you know you've got a company that's at least making money. You know that it's a big, larger company. The volume 250,000 is not a lot. But in fact, there was 138. Let's bump the volume up to 500,000 and see if that changes that number. It cut down a few. Okay, so now what we're getting is high-ranked stocks that are a short-term trend and an uptrend trend. What we don't know is how far into that trend they are. ADMA, obviously, this is a 1-year time frame. It's had a massive run and it's still continuing to go. And at extreme, wouldn't be one that I'd want to enter in at this point, but at least it's in that group of stocks. Now I could even look and say, here's a hold, COO. That one's looking a little bit funky with that gap there as well. I can move on to something else, CLS. Okay, so I can also add this to say of that screen, I want to set it so that these are currently not a signal change. They're just all the stocks in that group. If I wanted one with those signal changes, then I could take this and I could say, I want all of these things, but I also want a stock that has gone from a hold to a buy signal. Okay, that's going to be a lot lower number. But now I've got these are large cap names. They're let's look at Robinhood right here. You've got this move here where you've got this it's a $19 billion market cap, 20 million shares traded on average per day. Okay, that's a stock that's going to be pretty tough to be able to manipulate and have. If you get mass selling or if you get any selling, more than likely it's not going to be like some of these other stocks that only have 100 or 200,000 shares. So that can decrease some of the volatility. Okay, not always, but it can. You're dealing with a little bit different name. You're dealing with a name that institutions are dealing with. Okay, the Goldmans, any hedge fund that's out there that's looking at trading these, anybody that has big time money and they're pushing this stock, those are the kind of stocks that you may be able to create. Say, these are the only stocks that I want to focus on, and that you just simply do that with your scan. You can add any criteria that you want. You're going to get, in this case, you're getting H&R Block, nice looking pattern here as well. Again, this is a nice looking buy location. If I were to add that screen and I were looking at that every day and every morning, and I'm saying I'm only going to buy stocks that are inside of that screen with that criteria, then okay, I've got one. I've got one to be able to take a trade on. Okay, so let's look at this. Just the timing of these classes are typically we've got an extra day, an extra bar in there. Okay, but in the morning pre-market, we're not going to have that. So I could easily do a risk analysis for a trade setup on this and say, all right, I've got my bar. Now again, let me just remove this right there. So this is what we'd be looking at. This is what you'd be looking at in the morning. Say, okay, I've got all of the criteria, maybe minus increasing volume. Okay, I like to see increasing volume as well. But in this case, let's just say that this is enough for our criteria based on the setup that we've got. And now I've got to do the two things, right? I've got to come in portfolio. I will have had a portfolio or a dollar amount that's going to be close to the position size or my overall trading account as well. If I have $100,000 and I'm only trading 10,000 in this strategy, then I would want to set up a portfolio that is going to help me manage that 10,000, just that piece. So I'm going to have the number of shares based on that. Okay, so make sure that your number of shares are based on the capital that you're using for this strategy, not all of your assets. If you have a $100,000 account and you're not trading equities in all of those, okay, you could, similar to what we're doing in the portfolio, say I do have 100,000, but I'm only allocating a smaller percentage because I don't want to use all of that cash. Okay, so I'm going to go with a smaller percentage. We typically will go 2 to 2.5%. So 2 to 2.5% looks like this. If we start out with 100 shares, 5%. Okay, that's way too high just because of the price that I'm looking at. Now, I don't have a stop loss included, not yet, because I want to see what is my portfolio at risk first of all. Okay, in this case, it's saying that and I mention this each time, it's saying that this is at risk, but that is if this stock dropped to zero. Okay, the chances of H&R Block dropping to zero in a short amount of time before we could at least get out is very, very small. So that the probability of us losing or having this entire amount at risk and losing it is very small. But that being said, we've certainly seen 30% gaps lower, 50% gaps lower. Crazy things can happen in stocks. So we want to make sure that we're managing this. In this case, I want less than 5%. So let's go down to 50. That's 2.6. That's still too high. So 40, 2.2. 2.12, 35 shares. Let's go 37 shares. Let's go 38 shares. So 38 shares puts us at 2%. So now I've got $2,000 into this trade, or I'm going to, and now I also want to have a stop loss. Typically, I want to go at the stop loss below. If we've got a pattern that looks like this and it's close to that 236 area, I want to go below that or even below the most recent hold pattern. Okay, so here's a hold signal. I could go all the way down to 52.24. Let's enter that in and see what that looks like. So 52.24 for my stop, 52.24. That's 0.12 of 1% at risk, or $120 at risk. So if I got stopped out right here, if this stock went up, we saw that bar today. It's already, we know that it's up, but it immediately comes back and it's like zoosh, okay, and it goes all the way back down to here. At that point, I'm gonna say I'm done. It's not moving the direction I want. It's not moving in the direction it's supposed to. So I'm gonna get out of it and I'm gonna move on to something else. I'm not gonna wait around for it to recover. I'm not gonna wait around for it to decide if it wants to go back up again, particularly if it's hit my stop loss. Now, we know that it can come back down, it can find some support, maybe it goes up. There are times where, just like we talked about earlier, when you get that all of that color change, and I'll go back to that chart again, that we may want to exit, but before the stop out. But in this case, the stop out is saying, if it gets to this point, just cut it loose. I'm just going to be done. And this is a pretty tight stop. That's only 5% at risk. So I'm only risking $120 on this trade, which is 1/10 of 1%. That's a really small amount of risk that I'm able to take to keep my full position size. Okay. Remember, the position size here is 2%. So I'm able to keep my position size and keep a nice tight stop loss at 52.24. 25.11. So right in that area. Okay, and that's all I'm going to do. Then I'm going to go into my brokerage account and I'm going to say, okay, I own. I've already determined based on my percentage that I've got 100,000. Now I know that I want 38 shares, and I'm going to set a stop loss at 52.25. End of story. Okay, that's it. Now we're done. Then we check it each day. Do we get stopped out? No. Do we need to make any changes? Maybe. Okay, that's a daily process, and it's pretty fast to be able to do that. So let's say that we did get into that this morning at the open. So we're in that trade and we're up 1%. Do we need to make any changes? No, not yet. Not till tomorrow. So the entry process is really fast. It should be. And so you could spend, I spend about an hour in the morning going through everything and looking through all the trades. Most of that is not an analysis. Most of that is doing other things as far as looking for the pattern and the setup. We're going to be using specific scans and a specific entry process and a specific portfolio allocation. So we know what we're doing each and every morning, which again makes it a pretty fast process to be able to set up a trade like this and then manage it. So a couple of things in addition to that in the portfolio. One of the things that we've done now, again, if you want to participate in this portfolio each and every morning with the trade updates that we're adding, how we're selling, how we're removing, the number of shares we're removing, then that is in the Discord room, and they're typically I've got a link at the end of these videos or somewhere on the page where you can access the wheel portfolio and that is basically when we do that, we're going into, let me just show you a little bit about that process here as well. So in the wheel portfolio, we are going, this is a typical morning update, okay? Adding to the portfolio, we're adding this stock, here's the stop loss, here's the limit order price, here's the chart pattern, and then if we're exiting out of anything, we're listing those as well. And this all happens about an hour before the market opens. If we're updating stop losses, I'll update those. I also add a short little video, about 2 minutes, of talking about this trade, why we're setting it up, where it came from, and some of the additional criteria on that, and then a chart pattern of that also. So that's really inside of the Discord portfolio, and then also we'll continue to track the stocks and holdings and any changes. So if you're new to TradersPro, it's also really helpful to be able to get familiar with this process each and every morning. Whether or not you're taking the trades or not, it'll for sure help you in understanding this setup. So one of the things that we have in our trading plan right now is selling half the position with a 25% gain. So we've got 3 of those this morning. AMSC, which is still moving higher, but we're going to sell some of the position into strength. Okay, why? Well, we know that they don't go up forever. But we don't know how high they can go. So we don't want to sell the entire position, but we do want to capture some of those gains. So in this case, we're selling some of the position into strength, holding on to the rest of the shares, and then trailing the stop at the 236 on those remaining shares. Okay, so that was one of the first ones today. And then Carvana, we also did that on Carvana, which is also moving into some strength. So selling some of the position into strength, and then holding on to the remaining position and using a trailing stop. Okay, that's called a runner, or in this case, that's just how we're managing this portfolio based on these market conditions, taking some of those gains a little bit sooner so that we've locked those in, but not the entire position. Now we still have shares for more upside, because some of these stocks, you never know, like for example, let's look at, I think it was INOD. So INOD, our buy location was, I believe, right here, and it's already almost up in a couple of days, pushing that 20%. And it may, we've had some that can take off and go just, 100% from here. You never quite know which ones are going to be the ones that are really going to move higher or why. And so we don't want to sell all of the shares, but we do want to also manage our risk by exiting. Now, there's 2 reasons for exiting. Number one is it was within the trading plan to help us with this position size. I don't want to get a big portfolio right now. So the 2 ways to be able to manage a little bit smaller position, or about 20, so we're about 30% equities. I want it to be right around 25% and the rest in cash right here, is to sell the losers quickly and then capture some of the gains on these as they're moving higher. And what it starts to look like, if you can see this right here, these 3, this is, now we've just got a little bit smaller position size on Carvana, DYN, and ANET. Okay, if the market, now these are still good market conditions, but we're at the top end of the trend, and I don't want to be really heavily invested right here. I only want to participate in these handful of stocks, take some gains, put that money back in cash, redeploy it, take a little bit tighter stop loss. If we have anything that's not quite working, we can sell out of those as well. And that essentially is the trading plan and the portfolio strategy for this. And it works nicely. It's not, it's obviously not perfect, but what is perfect? Is S&P 500 perfect? Is Dow perfect? Is what, all of the stocks perfect, or only a certain handful? It's a methodology to be able to focus on the highest ranking stocks with current setups in the current market conditions, based on what the current market conditions are giving us. Right now, we're back to a strong buy-sell ratio. So I still want to be fairly aggressive, and you'll notice also that some of these names have really popped. So some of these names are that Russell 2000 quality of names, and it gives a nice move. Let's see, a couple questions typed in here. Okay, how do I get access to this portfolio? Okay, so this is the this is the wheel portfolio, and you can access that. So one of the ways, if you've already accessed it and you haven't logged into it, then you're going to want to check your login. I would have sent you out a login information to get into this wheel portfolio. And if you do have questions, additional questions on that, or don't have it, then you can always just email, send us in a support ticket at the help.traderspro.com. And then we can get you logged into that TradersPro if you've already signed up for it. If you haven't, then I'll post the link to that at the end of this video. I say that, but sometimes I forget, but I'll make sure that I do that today, Polly. And then if you, like I say, if you have any other questions on that, feel free to basically any email that you've got from us, just reply to that. And then we'll make sure we get that email and we can get you set up there as well. Let me jump back over here. And so we've been focusing on buy sell ratio right here, direction alerts. Oh yeah, our allocation. So our allocation is a little bit smaller just because of where we're at in this trend. Had we started, and back in this portion of the trend, where did my marker guy go? Close that. We were right about here last year. Was it here or was it back here? One of these two moves. And we ended up with about, we had about 60%, 65% in equities. Okay, so there are times where we can be a little bit larger percentage, but right now, based on where we're at, that again, this is how I'm managing this particular portfolio. You can do it however you want, but create the trading plan for it, because it's always the same. Okay, I still am going to trade. If I decided I wanted to buy this stock today, which this was our new entry for this morning, if I decided I wanted this new entry, but I want more than the 25% or the 2%, then you can control that by the number of shares that you're buying. Okay, so if you want to take a little bit more risk, nothing's changing except for the number of shares, even the stop loss. You can adjust that as well, like we've done on these. We've got a little bit tighter stops on some of these new entries, and that's I call it the lever. Those are the levers we pull on this entire system, and that is uptrend, where are we at in the trend, how big of a position do I want, how many holdings do I want. That means the number of shares I can control, and then also my stop loss I can control. I'm going to end on that note. I appreciate everyone's time and effort, and we will see you on Thursday. Thanks a lot. Bye now.